Hello everyone, happy Sunday. Simon is here with AvaTrade. Welcome back to our weekly webinar, and a special welcome for the new people. And for those of you that this is the first time visiting us, a few words. And as I always say, it's on the title, your weekly trading plan. What we try to do here is to look at fundamentals, some technicals, look through some instruments and try to create a structure plan for the upcoming week, possible levels, possible actions, possible scenarios. And as I always say, you plan your trade and then you trade your plan. It creates a better results. And it's not just me saying that. If you talk to any successful trader, they'll be saying that all the trades they make, they're pre-planned, and they get ready for them. It just prevents you from doing crazy and stupid things and impulsive trading. So a few things about myself. Something with my computer. Okay. This is me, Simon Friedman. I'm a senior account manager with AvaTrade. I started my trading career in June of 2000 when I started to trade as a proprietary trader back in New York City. I worked in a few firms and did it for about 11 years, actively day trading. That was the kind of a focus that we had as a prop traders. And after that, I moved to trading in the different setups and also mentor and educated a lot of traders. And currently, as I said, I work with AvaTrade, trying to share my knowledge and help our customers to become better traders. Now, the agenda of the webinar, we go through indices, stocks, commodities, and Forex. And of course, these are the ways of keeping in touch with us and using all the information that we post there. You have Telegram, you have Twitter, and my favorite YouTube channel. Most of you are probably watching this webinar on YouTube as well. And as usual, I encourage you to subscribe to the channel and click on that bell so you'll get notifications. Feel free to share this with your friends, put the likes, it always helps. And this is about YouTube and other things. Now, before we go any further, of course, a risk warning is important. You can find the full document at avatrade.com. And the idea is really simple. We're not here to suggest trades. We're not telling you what to do. It's your full responsibility to make your trading decisions. And this is all just for educational purposes. Now, let's move on. And you see the picture here, why stock market bulls are applauding the S&P 500 close about 42.31. I will be talking about it in a moment. I just took this picture from one of the websites. I think it's a Market Watch. The credits are all to them. And of course, it says right here, 50% retracement of the bear market sell-off encouraging, but reasons remain to be cautious. Okay, before we go further, I tried to start with the big picture, and the big picture is following. We're still in the same environment. We have Feds increasing the rates, which is potentially hurting the market, but they're trying to do it in a very cautious way, so not to spook the markets. They try to do everything not to cause the recession, even though technically we are in the recession because we have 2 consecutive quarters GDP declining. Now, war is still there, unfortunately. I hope one day or soon that we'll be saying the war is over. Thank God, happy for Ukrainians. They can go back to their normal life of at least rebuilding their normal lives. Unfortunately, it's not there yet. And that war created a lot of chaos, including affecting the markets, of course, the shortage of gas. We'll take a look at the gas in a moment. Oil is also fluctuating as Russia is involved, of course, largely in exports of gas and oil. Now, also important to mention, those of you that trade for a few years know from the experience that August is a slow month, and now we're entering the last 2 weeks of August, which are the slowest for trading. Now, what does it mean? There's still opportunities, great opportunities, but just keep in mind that the big players, a lot of them are on vacation, and as most of us have our wives and family members and the kids, of course, nagging us. We need to go on vacation. We need to have fun. Trying to get their fathers off the trading desk and so on. And it's normal. We all need to spend time with our families. So those big guys, and I tell you from my Wall Street experience, the Wall Street, the last 2 weeks of August is you don't see. I mean, I'm exaggerating. Of course, you see people, but there's less traffic, less people come to offices. A lot of people taking weeks, or some even take entire August off. So just speaking from experience, and I know a few of or some of you would agree with me if you have traded for a few years, so you can compare August to other months. Now, just for you to know, if you feel that the trading has changed, it's slow, things don't happen the way they are, that's one of the reasons. Okay, so come September, everybody goes back to desks, more active trading, institutions are trading in a normal capacity, and so on. So I just figured I mentioned that to you. Now, let's focus on this why stock market. The title here. Basically, what we did on S&P 500, we recovered 50% of losses since the June low, and it's kind of encouraging. But on the flip side, there's a lot of cautious statements from some of the famous investors, and this is something that I looked through. Kathy Wood, if you know, she has a fund, RK, and that's the ETF trading. And she had a few interviews, and she mentioned that she's very cautious, and she said that it might be a big surprise to the markets, and we might actually continue falling and drastically falling. One of the reasons she brings is a lot of buildup in inventories of big retailers like Walmart, Costco, Target, and the first thing came to my mind is the retail sales will be reporting in the upcoming week. We'll take a look at the economic calendar in the moment. So that's what she's saying. A lot of we mentioned a few weeks ago, and every week I mentioned there's always somebody being pessimistic about the markets and so on. And again, we're not here to take side. Are we going higher? Are we going lower? And you and I, most of our retail traders, we're here to make money, trying to catch a wave and catch some profits and wait for the next opportunities. It's important to remember. I'm not sure if any of you here are really trying to play Warren Buffett, buying companies and holding it for years. It's not why we come to the CFD brokers. We hear, the scalpers, the day traders, there are some swingers, different style of traders, but I haven't seen, there are few, but I haven't seen many of our customers really being convinced on the market and getting something that they want to get rid of in 5 years. It's not happening, and one of the reasons, of course, because you're paying the swaps. So even if you make money there, sometimes the swaps, if you're holding, of course, swaps are not really significant if you trade normal. If you here to trade to hold it for 10 years, you could see a nice build up there that you're not going to be happy about. So that's Kathy Wood being pessimistic and others. Now, let's take a look at economic calendar and just try to make sense of what's happening in the upcoming week. We have GDP numbers from Japan on Sunday night. We have retail sales from China. And again, before I go further, just to remind you, this is not a full economic calendar report here. What I do, I just take things with a high impact, and you can see in the red. And I encourage you to go through economic calendar and choose. You can filter things that relate to your trading. I mean, if you only trade something to do with Europe, you just want to see Europe, and you can choose those things. And you can go in importance. There's low, medium, and high impact. So here I just choose high impact. Again, you have to choose what's relevant for you. Now on Tuesday we have Bank of Australia meeting minutes similar to FOMC, which happening in the US later on. We have employment data from UK. We have CPI numbers from Canada on Tuesday. Inflation numbers important now Wednesday, and that makes you think, okay, let's take a look at New Zealand dollar. A lot of reports here of monetary policy, interest rate decision, statement, and press conference important. So we know that Monday and Tuesday into the numbers going to be a lot of actions in NZD. We have CPI numbers from UK. As you know, the last move by the Bank of England was increase in interest rate. If this CPI comes higher than expected, that could cause another one. If it happens to copy the US results, which I forgot to mention last week, the CPI numbers came a little bit lower than expected, and that caused the market to rally, but I saved it till we look at the charts in a moment. Now, GDP from European Union comes on Wednesday as well, and this is the retail sales that I mentioned that Kathy Woods talks lately a lot about, that the build up in the big retailers like Walmart, Target, Costco, said that the customers don't really spend a lot and inventory has been building up based on what she said. FOMC minutes on Wednesday we'll be seeing from Fed. What's the next move? What's the possible, what's the possible interest rate and so on. Let's see. It's always important to follow this report, especially if you involve the US markets. Now we have employment change from Australia, and we have retail sales from Canada. So these are the things that are waiting for us in the upcoming week. Okay, let's move to the MT4 now. This is the trading terminal. For those of you that are not familiar, some of you are using WebTrader, which is a great instrument, and this is another option that you have, the MT4. Now, let's go to the markets, and I start with a plus 500 with US 500, which is S&P 500. Now, what's happening here? That's what they're talking about. From the sell-off, we actually moved 50% of that sell-off. And what's next? I think last week I mentioned, I'm not sure that analysts were looking for these numbers, and that would possibly trigger buying coming in. And we did have a nice move. We pretty much had 4 straight weeks to the upside on S&Ps and other US indices. Now, on Friday, S&Ps rose 1.7%, and that's what's happening to S&Ps. Now, what's next here? We'll go through the other indices as well. I draw the level here of 43.02, and the reason for this level is a few things. If you take a look at the daily chart, this is the attempt that we had to bounce back, and from that we made a lower low. So this is the bar right here, and the high of this, as you can see, is 43.02.75. Now, will we go and break and go higher? Possible. Will we bounce back down from here? Also possible. Now, as you could see, and then what we mentioned last week, we were in between 100 and 200 moving average, and I said there's a possibility of us moving higher and retesting the 200 moving average. We did, and Friday was a very robust day. We closed higher and on the highs on Friday. Now, again, you heard me saying that's one of the strategies that traders are using is the Thursday-Friday rule. Friday closes above Thursday, that possible Monday move will continue in the same direction. So that's what we might see on Monday. Now I will be watching this, of course, 4,300 psychological even number area will be interesting to watch. Technically, this level here, 4302.75, could be resistance. Now, Nasdaq is touching the 200 moving average. I guess it closed a little bit above it, and if you could see, we actually reached those levels. And again, I just want to bring back the S&Ps. The date on this move was May 4th. Okay, so S&Ps didn't reach that level, and Nasdaq did, and we actually closed above it. This was the same date, May 4th. The high here was 13,554 and a quarter, and the closing about $24 higher. So we did close higher, which is, it brings Nasdaq, I guess, currently more bullish. Of course, it lost much more than the others during the fall. So that's on Nasdaq. And Dow Jones, let's take a look at the Dow Jones. Dow Jones, similar to S&Ps, it didn't reach that level yet. So that level here, on the same date of May 4th, the high was 34,000.25. Let me just change it here really quickly. I put 20. I'm going to change that to 0.25. And of course, next week we'll have a chance to see what actually happened. So again, this level represents a possible resistance if we reach that level. Okay, now also we hear about the 200 moving average, and again, going back to Nasdaq is just trying to break through 200 moving average as of now. Another strong move happened on Nikkei. Take a look. Friday was super robust. I guess a lot of stops with this level. It was kind of a triple top, 1, 2, 3, and then we just went robustically. That's a strong move to the upside, and we're reaching the level of January 18th on Nikkei. This is where the drop started, and the high of this bar was 28,720. Okay, that's the horizontal line that I drew, and we closed at 28,755. It's about 35 points higher. So again, what could happen here? We could continue. As always, two scenarios. It's not going to stay still. We can move higher, and in the case that we come below 28,720 and start building some resistance, that could be a reason for the sellers to come in and bring it lower to at least this level, the previous level of resistance. So very interesting what's going to happen. The move was very strong, super strong move. Again, it was driven, of course, by the in general the global markets going higher, but technically speaking, it could be that there were a lot of stop loss orders here, and they just got a nice short squeeze. Now, China, of course, China is on the radar of everybody. We've been talking about it in every meeting with you. And take a look, on Thursday, we moved back about 13,500, and then we'll continue. But we're still on Friday, we didn't break the Thursday's high. So high on Thursday was 13,730, and then we closed 705, about 25 points below Thursday's high. So again, if we're looking for the up move here, first we'll need to confirm a breaking of Thursday highs. So we'll be watching that. China has a lot of issues, and a lot of investors and analysts are talking about the possible threat. We've been talking about it with you as well, with all the real estate thing, possible burst of that bubble, as a lot of developers been in trouble, and that comes with the banking system being threatened by people refusing to pay mortgages and so on. So we'll be watching, of course, China, and with the China together, I like to bring copper always. As you could see, the same thing here. Thursday we had a nice move. We came to this 369, 370 level. Friday we tried to break, and then we ended up going lower. So we are above the 50 moving average, and we're facing resistance at these levels over here. Just to show you in the big picture, copper has been suffering a lot lately, and this is 1, 2, 3, 4 weeks up. Besides, this 1 week was pretty much flat. So we'll be watching, of course, what's happening in China and the economy, and we'll see what copper is doing next. So if you take Europeans, they also made a nice move, but they're far behind US on this move. Besides the FTSE is doing very nicely, and it's actually getting close to the June 8th. And just to remind you, I think it was June 15th when we start falling. Let's see, June 12th, yeah, June 8, June 9, when US markets start falling, and the latest fall. So FTSE, it's been getting closer to that level. And if you remember, I always say things about FTSE, not always, few times I mentioned it, that FTSE, it's probably the most realistic instrument that shows reality. That's my opinion again, because as we felt when pandemic came in with COVID or Corona, that time came with devastating news, FTSE fell down, but we still didn't break the levels, the highs before the pandemic. Okay, just remember this picture. This is the weekly chart on FTSE, right? Take a look. We dropped, and slowly we came back to the pre-corona, pre-COVID levels, as opposed to, let's say, the S&Ps. This is the drop of S&Ps with the COVID, and take a look at this move. So no wonder Katie Woods and others are really predicting a doomsday of the market, which is possible. Everything's possible. Some actually, I ran through a few articles, some comparing this to the 20s, 1920s, 1929 sell-off of the market, and it was a similar picture. Actually, again, I'm just quoting what others are saying. It was a nice recovery similar to this, and then we dropped. Also possible. I mean, take a look. Let's be just an observant here. Let's say we're not trading, we're just looking at this picture, right? But all this move up, which is, so this is where FTSE stopped. FTSE stopped at the pre-corona level, and US indices just continue. And now we had the sell-off starting the beginning of the year. Okay, then when March, we had a nice bounce back to the previous resistance, right? Then we made a lower low, and now we're trying to make a high. And if we stop here again, the 43, around 4,300, that would make a lower high. That means that technically speaking, we could make again another lower low. So again, just speculating here. And if we stop here, we can come back and retest the 36.63 level, also possible. But again, some are predicting that we might just drop who knows where. And if you take a look at the monthly chart, we can go anywhere. Okay, this was the, again, Corona, super move up, and a nice correction, and second month up, and we might continue. Again, just thinking out loud. So that's as far as the indices. Now I just want to bring you another one, the Nifty. Interesting, we mentioned it a few times. It's been going up, and again breaking the levels, and we're coming to this April, from which we start falling, and that will really be kind of aligning with this level around here. So again, it could be that this could be, again, fundamentally, I don't really understand why they're going up. I guess we don't know something. So again, this level here would be around 17,879, 880, and possible that would be a next test for the resistance there. And that's it pretty much with indices. Let's move to specific stocks, and I prepared a few things for you. Teva, I actually didn't follow the stocks for a while. I just want to share with you a personal thing. My first trade ever, before even I went becoming a trader, I was working in an assisted living facility back in New York, and my boss told me about the stock. It was maybe year 1996, 97, 95, I don't know, 96, let's say late 90s. He told me about the stock, and I bought it at 650, I remember. And let's take a look if we can find something here. It doesn't go that far. Okay, so I bought it 650, and then it reached $10, and I sold it, and I was so happy. I made a few $100s there. That was my first trade ever. Now, why am I saying that? Sometimes I watch this stock. It's a pharmaceutical company. They working with the generic medicine. Great company. They had some issues lately, as you could see. The stock was on the downtrend. And since the last earnings, they had a very good earning report, and the stock went up. And I didn't see it. Just saw it in the news somehow. Now, why am I bringing it to you? Just looking at the values, it came from $7 to $11 here, $11.20. Now, I checked. There's some upgrades. They actually upgraded it to a buy. Bank of America and Goldman Sachs. Bank of America recently, or after the earnings, they had a target of $10 for share, and then a few days later they increased it to 13. So something to look into. It's not an expensive stock, and again, it could go up to 13. A few scenarios you can look for. You can wait for the pullback and buy it. I'm sure somebody's going to jump on shorting it. Also a scenario. But just to bring it to your attention, I was in a short period of time. Percentage-wise, it's a huge move. It's almost 50% move within a month, right? So that's Teva. Now, Disney had good earnings. The stock gapped up, but then sold a little bit. And they've been saying that they're really catching up with Netflix, and the results are showing it with their Disney Plus streaming services. And Netflix, interestingly enough, I mentioned to you, I think last week, that it's been sitting here, and the longer it sits, it could catch the move, and actually it did. Had a nice move from this consolidation, and we've reached the bottom of this cap down. So now it's a very tricky one. We can actually, if we break through that and start building up, we could actually close the gap. I mean, that's hypothetically, anything could happen, but it was a lot of accumulation here. So let's see what happens next. That's Netflix. Now, Uber had also a nice move with earnings, and then we fighting this 200 moving average here, which is a strong resistance around 32.78, right? We did touch at 33, even higher, and we came right back. So around $33, it looks like it's a resistance. Of course, it depends what the traders will do with this specific stock, and of course, what's happening on the market. Important to watch. Now, this is Uber. Now, Intel, since the earnings, the stock was super weak. It went down, you're on the market going higher, and then you start to catch up a little bit. So we reached about $36 and trying to break through this previous low. Now, we below all the indicators. Again, on the market going higher, Intel didn't have a chance to do it. I couldn't do it. So let's see what happens. If the market continues higher, Intel might move higher. If the market flips, Intel might go retest the lows again here. Apple, take a look. This was the high before we dropped. High here was 171.42, and the close on Friday about 40 cents higher now. So let's see what happens. Again, if market continues, Apple is the strongest stock. It's doing better than S&Ps or the indices specifically. And again, the new products on the horizon and so on, the company is doing great. And nevertheless, if the market pulls in, Apple might, of course, pull in, and there's going to be some profit taking after this huge move, right? This is a big move. You could see from June lows, beautiful move to the upside. Now that's Apple. What else I wanted to bring you? Of course, Tesla and Twitter. Now, we spoke about Tesla last week. They got approved 3-for-1 split, and Musk cashed in another 6.9 billion. And I believe I read somewhere that Musk or the rumors that the Twitter deal might still go on. And it's actually very interesting because some analysts are saying they're putting a price tag on $50 on Twitter. So let's take a look at Twitter. It's been recovering nicely since it took Tesla to court. Take a look at Elon Musk specifically. Now, so there are chances the deal will be reconsidered or pushed to, I don't know how to phrase it, but there's a possibility of Twitter reaching the $50 target. So something to pay attention to. AT&T, we spoke about it as there was some good prognosis from investors. Lately, it's been super weak since the last earnings, and now it's just trying to climb back up. And I guess when we reach close to $19 and we go back above this support, now was confirmed as a resistance around 1883. We might see a continuation to the upside. As of now, not really. Now the banks, they've been really strong lately since they got really beaten up. This whole week they were going higher. So this is JP Morgan facing the 100 moving average. And let's see what's next. There was a pretty much move, a nice move to the upside. Goldman Sachs much stronger than JP Morgan, and we are above the 200 moving average here. What's next? We'll see. So far, it's been moving nicely. So the banks are trying to recover from their losses. Citibank is actually in a very interesting spot. It's retesting these levels. There was a support and resistance from which we made a lower low, and now we're back to this level around 54 dollars, 54 and a quarter. So we'll be watching that as well. Okay, we've been talking a lot about equities today and the specific stocks. Probably going to take a little bit longer today than usual, but it's okay. I wanted to cover a lot of things. Now, we spoke about copper that is following the China. Let's see what's there. Gold is out of 1800 or 1792 resistance here that we couldn't do for a while. And Friday was a super strong day for gold. We closed on the high, so there's a possibility of a continuation, maybe retesting the 100 moving average. And I would also watch this level here around 1812 based on this candle here from which we sold out, and we'll be watching that in the upcoming week. And it's nice. You might continue higher. Again, it depends what dollar is doing. And gold's a very interesting spot here on Friday. And again, Friday was weird. That's why I'm waiting for Monday to get some clearance of what's happening. And here are my thoughts. Take a look. Friday, the last day of trading, right? Gold went higher. Dollar index went higher. and the markets went higher. So one of my favorite phrases, something's got to give. Something's not clean here, right? Think about it. The S&Ps are higher, the markets are higher, the equity markets are higher. It means maybe the gold should be selling, because that's kind of a safe haven thing, right? As we mentioned a few times. And for those of you who are new, safe haven means that when the risk off, when the sell-off of equity market, which is a risk off, another name for it, then the money goes to gold, sometimes Japanese yen, Swiss franc, as a safe haven. Now, in this case, market was ripping up and gold was going higher. So you would think, okay, maybe another reason why gold is going higher, maybe the weakness of the dollar. And guess what? Dollar also went higher. So that's why something is really, really weird here. And I'm very, it's very suspicious here. And Monday, I'm waiting for Monday to get some clarity. We either going to have a gold coming in and sell off a little bit, or we're going to have a correction in the market to the downside. And again, or again, if they continue market going higher and gold going higher again, that's something fishy happening there. So that's gold, right? Now, as I said, 1812 could be a next test, or a little bit higher, that 100 moving average indicator. Now, crude oil, I mentioned in the beginning of the conversation. Also, another reason, usually crude oil is going high on the market going higher. So it shows, okay, we're doing great with the markets. That means high demand for oil. Also, China went higher, and the gold, I'm sorry, and the oil didn't. So another question mark, what's happening with oil? Natural gas did go higher. We're facing resistance here around 887. This is the level over here. We stop on this move. This is the last fight over the level, and then we're back here again. So we'll be watching possible pullback, or if we see closing about this 8.87 area, we might go and retest the 9 and higher on natural gas. And fundamentally speaking, of course, Russia is playing and using this to muscle Europe by cutting the supply of natural gas. Soft commodities, wheat has been really, really struggling with this 800 level here. As you could see, this was our stop. We bounced, we came back below, then above again, then below, then above again, then retested its 753 level, and then Thursday, a nice Wednesday and Thursday, nice move to the upside. We closed higher, and Friday is pretty much flat day. Open 801, close 803 and a quarter. $2 and a quarter move. Natural gas, pretty flat day. So we need, you know, for the buyers, of course, important to see a build up above this 800 level for potential move higher. Let's see what happens here. That's wheat. Corn has been strong in the past few weeks. Continues. Maybe we'll try to go to these levels at the bottom of this gap to retest it. So that's as far as commodities. Let's take a quick look at cryptos. Had a nice move. They're trying really hard. As I mentioned to you, in the range now between 22.5 and 25.5. We're playing with 24.5 now. This was a resistance here on the 30th of July. The high was 24,631. We play with these levels, and we really trying to get to 100 moving average. Ethereum, much stronger here. We are about 100 moving average, trying to reach maybe a 200 moving average or this level of 2000. We're getting very, very close to 2000 level in Ethereum. So Ethereum looks much stronger here. Now, let's wrap it up with Forex. And we mentioned dollar index being strong on Friday after a sell-off. We are holding this 105 area. you could see on Wednesday, we made a nice move down to 104.5, but we did close about 105.08. Thursday, close a little bit below 105, and then Friday, a nice move to the upside. We are trading a little bit above the 50 moving average, and the closing price was 105.52. The high was 105.74. So again, let's see what happens this coming week. We have FOMCs, we have general, we have retail sales and so on from US. And technically speaking, we are holding the 105 level, which would try after this a nice drop from 109. And then this is the second attempt. If we move high and we break 106.5 level, that would give us a clearance to further move higher. But as of now, it's a nice range between 105 and 106.5 area on dollar index. Now, as far as the major currencies on this weakness of a dollar, two of them were higher than the others, and that's Australian dollar was super high, a nice recovery, and we are actually bouncing against the 200 moving average here. And another one was New Zealand dollar, also similar idea. And as you remember, I mentioned in the beginning, New Zealand dollar has the interest rate decision this week coming up. So New Zealand dollar, again, we might see the increase or surprise increase, and that would bring it probably to these levels here, 0.6559. Let me see. Okay, 0.6560 area, and that would actually be right next to the 200 moving average. And if you take Australian dollar, if it continues, actually, you would need to break this 200 moving average over here. Now, the rest of them didn't really do much. And take a look on euro dollar. It actually had a nice move, but we're facing this resistance here. This is the old line that I had from this bar right here, 0.3151. We tried on the two attempts, Wednesday and Thursday, and then Friday was sold out, and we came, what did we close? 102.56. So 102.50, we are holding this. It was a strong resistance for a while, and I mentioned to you a few weeks in a row, and now we are testing it if it's really becoming a support. If not, we're going to have continuation to the downside. Pound, also, we couldn't break to the previous high. As you could see here, this was on the 1st of August. The high was 122.92, almost 123. Wednesday, we had an attempt to do it. We couldn't do it. Thursday sold out a little bit on the weak dollar. Pound was weaker, interestingly. And then Friday, continuation to the downside, hitting the 50 moving average on the pound. And the yen, I'm going to wrap it up with the yen. Dollar yen, as you could see, we are playing with the 100 moving average here after trying to break above 135.5 right here on the 5th of August. That was the previous week. And then on Wednesday, dollar was super weak against the yen, and we are trading at the bottom half of this bar. So possible continuation to the downside. Of course, depends what's happening in Japan, and let's see what the dollar index will be doing. That's it pretty much, guys. I want to thank everyone for participating, and I hope you're enjoying the weekend. Get the energy, spend a great time, have a great time with your families. Get ready for the upcoming week. If you're trading, it's going to be a few announcements. We'll be watching the markets. We'll see if this move will be sustainable, if we're going higher. We'll be watching the levels that we mentioned on S&P's 4,300 key level, 4302.75, and we'll see what US dollar is doing. Have a wonderful, wonderful week, and we'll be back next Sunday. All the best.